It would appear that Bitcoin is getting ready for another move to the upside. In this video, we're going to be jumping down into the technical analysis on BTC, reviewing what's happened and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. If you haven't joined us in Discord, though, you are missing a trick. Check it out. Link is in the description down below. Let's jump right down into this video and start talking about what's going on here with BTC. We're going to start things off by taking a look at this one just here. This is going to be smart money concepts. This is Bitcoin paired up with USDT on the BitGet spot exchange and the 1 hour time frame. Okay, and as you can kind of see on this 1 hour time frame, we have a lot of fair value gaps that have been left behind. Way too many of these to think that they are all going to be left behind and we're not going to have some kind of retracement. The positive news is that we don't think we're going to go down and fill these gaps out just yet. I still think there's a little bit of a push to the upside here to be had before we start this break to the downside on these fair value gaps. Now, these fair value gaps, as I say many times before, if I just jump over to BitGet here, go to trade, spot trade Bitcoin, we can see how they get created, right? They're created when there's an imbalance in the order books, right? So here you can see the order book, you've got all the sellers and all the buyers. And when these things do not match up, you get these gaps that get left behind. Let's just go to the daily time frame here within our trading view on BitGet. You can see that there's two daily time frames just here with fair value gaps. These are created because there's such a big buy order that is placed at these low ends that cannot be filled. The price has to move up to where the sellers are because there's always a buyer and there's always a seller. So in order for the buyers to actually have their orders filled, we have to find equal amounts of sellers, right? And so when there aren't any, or there's an imbalance in the order books and there's an illiquidity pocket like this, price jumps from the low side to the high side, leaving behind the gap, right? And so when we see these gaps, more often than not, price wants to respect them and come back down and put liquidity where liquidity was not. Okay, and I say this pretty much all the time at this point in time. I have put together a course as well down at 𝗕𝗘𝗪𝗀.com if that's of interest to you on smart money concepts and how to understand it and trade it. And essentially, when you have these gaps here, although we don't have a time frame on when they get filled, chances are price will want to come back down and fill them out. Okay, so on the low side here we can see it's 27,000. There's also one down a little bit deeper here at 25,000, right? So we know on the daily time frame we've got these. There's also some on the daily time frame that haven't been filled out from way back down at the $17,000 range as well. So we know at some point there's going to be a high probability that price will have to revisit those areas, at least, you know, according to the principles of smart money concepts. When we start seeing the fair value gaps get stacked up, specifically like we do on our 1 hour time frame, then we also have to pull into question what is actually going on and is the market being manipulated. As generally speaking, it's unusual to see large order on top of large order on top of large order if fair value gaps are being created. It wouldn't make a lot of sense to continue to pay higher prices if you in fact only wanted to pay $27,000, or more specifically, if you wanted to pay $17,000 for Bitcoin, you don't start paying $20,000, $22,000, $25,000. Instead, you stop buying and you let things cool off. So when you start seeing them being stacked up like this, you have to pull into question the manipulation part of price action and whether or not price is being deliberately pushed to the upside. And then of course you ask the question, who has the most to profit and who was in the most financial difficulty at the time when we started to see such a significant and manipulated move to the upside? And well, there was only a handful of answers to that one. So yeah, fair value gaps, I think they're very important in the same way that a CME gap is also very important. But as I say, you know, it takes a bit of time sometimes to actually fill out. It's not something that you see that's instantaneous or anything like that. And while we're here, if you haven't yet joined BitGet, why not check it out? Affiliate link is in the description down below. I use BitGet for all of my leverage-based trading at the moment and 90 to 95% of all my spot trading. It's my kind of go-to platform. It's quite good. It's got a really good platform that's well laid out. You've got access to TradingView that you can draw on and your analysis stays drawn on. You can, of course, course, use the order books for analysis. You can do your buys, your spots, your leverage trading, all of that kind of good stuff. Now, they don't have every single coin or token that I'm interested in, but they have the majority of them. And yeah, I'm really impressed with the platform so far. So if you're looking for a new exchange that maybe isn't Coinbase or Binance or KuCoin, you're just looking for another one to diversify into, then why not check out 𝗕𝗘𝗪𝗏? Affiliate link is in the description below. Let's jump back down into the charts. And now let's talk about this one. This is something that we were talking, at least I posted it out to our members yesterday afternoon, specifically our trader tier members who were going long on Bitcoin, and we were kind of looking at a potential move to the downside, more towards this this box down here at 29,571 to 29,806. This was based on the premise that maybe we had a flat corrective structure right inside the middle here, and you can kind of see we had something very similar occur here. Now we can look at it as a flat correction, we can look at it as a regular correction. It doesn't really matter too much. The principle was the same. Essentially, we had a small push to the upside with a move to the downside. Now, this was not my favorite option at the time. I thought we were just going to move straight down, but the flat correction is there because the stochastic RSI was actually indicating that a shift in momentum was likely to occur, and so therefore we had this as an option. And as we can see, we started to break back down after this push to the upside of this flat, and if we can see, we can actually start to track our next expectations, because we come down already here. It's possible that we have actually finished this just falling a little bit short. So what I want to do is I'm going to take this low and this high, and I'm going to go ahead and move it onto here, and we can see that we actually have to adjust our target range ever so slightly. And we are still a little short, but we're close enough that I would be happy to say we don't really have to come down deeper here. We could argue that we are done at this point with this local low right there. Okay, we'll see how that kind of plays out. It's possible that we continue this move to the downside, of course, but for now I'll leave it like this and say we're probably looking for a move and a swing to the upward direction. Not only are we coming out of the oversold area on the 1 hour stochastic RSI position, but we're also oversold on the 4 and 8 hour time frames, indicating that we still have a little bit of a push to the upside to be had. So all in all, right now it looks like we are probably going to be moving upwards in the price chart, which then ties us into our daily chart, because our daily chart, as you can see here, has this bearish higher high, higher low situation going on. We bounced from the low. We'll be targeting out the high. There's no guarantee that we actually make it all the way up there, but if we do make it up there, that is a CME gap for BTC. Let me show you what that is if I bring up this one here. So we have this CME gap that is created from the daily close position over here on the 6th of May, and then the open position on the 9th of May. And there's a difference in price between those two. And as such, you end up with this gap at 34,455 to 35,180, right? And so price could potentially be moving up into that range. And that happens to coincide with our upper area on our daily chart here. As you can kind of see, our upper trend line would actually be more towards that $36,000 range. That means that we can still be going after $36,000, which would basically be that CME gap getting filled out. Now, as I said, higher highs and higher lows have a tendency to wanting to break down. They don't go up forever, and you can see this time and time again if you just reflect on this chart here. Higher highs, higher lows, going from 32k to 48k, breakdown. Okay, over here where we were down at $17,000, we rallied up to $25,000, breakdown. Higher highs and higher lows all the time here, and they were breaking down. Now when they're the other way around, you can see lower highs and lower lows, they break upwards, as you can kind of see time and time again as well. So where we are right now, as I called it many times before, the biggest bull trap in Bitcoin's history is a pretty significant one here, because we've been breaking up into higher highs and higher lows, but we do have to see that break to the downside. Okay, you can see this time and time again depending on where you look at on your different time frames. So over here, for example, you can see we're up in higher highs and higher lows within this little range, and we had to break on down. Now there's no guarantee that you come down to a new lower low, and this you can argue was a black swan event. I think essentially though, if you really break down what was going on here, the Fed pivoted, and you also saw this crash in the market, as well as a pandemic. and as well as the fact that you were heavily needing a correction at the time, higher highs, higher lows, looking to break on down. Okay, and of course we were going down here. We kind of had a little mini break, and then we broke down even further. Okay, so just bear in mind that there's a lot of things that can be going on in the moment, and where we are right now, in my opinion, is a really dangerous place. It's kind of getting a lot of retail investors kind of FOMOing in, thinking that the economy is in a really strong place and there's going to be so much money to throw at crypto that is going into a bull market, all while actually the reality of the situation is people are losing their jobs. People are going to have their homes repossessed in 12 months or so if they cannot continue to pay their monthly payments on their mortgages. Interest rates are climbing, and they may have stalled in the US, but they're climbing everywhere else as far as I can see. In the UK, for example, we can see that inflation is actually increasing, it's not decreasing in pockets, and you can emit things that people actually need, like food and gas and energy, from your equations. And sure, the other things, the remaining items, maybe the inflation's going down on, but the essentials, that the everyday items that people are actually having to use and buy, that they're not going down, they're going up, and therefore we have to consider the fact that maybe we haven't beaten the back of inflation, and maybe those interest rates do actually need to stay and remain high for a long period of time, meaning that we're not likely to see any pivot or reversal in interest rates. And as such, unfortunately, more people will lose their jobs, more people will lose their homes, and more people will have to sell their assets and their investments in order to remain, I guess, being able to pay and keep a roof above their head, keep food on the tables. These are real world problems outside of a price chart and a price action chart. Okay, and the economy in the world, it is not in a strong position. Not yet. And that is the opportunity. Okay, so the opportunity comes when max pain hits. We haven't hit max pain. You can look at a price chart, you can say, oh, we had Celsius, we had Luna, we had FTX. For most people, that seems quite painful. But from my standpoint, for someone who's been able to navigate all of that, this has not been a painful market. We haven't seen real world pain. We've seen some pain in pockets, within, a few projects that have gone down, but we haven't seen that moment where retail investors are mass selling through necessity, fear, and all of that. And when you have that kind of max pain entering into the equation, that is when you truly do see the markets bleeding out. But let me know what your thoughts are in the comments below. Do you align to this thinking? Are you thinking, we are now just in a bull market, we're going to the moon, we'll never see $20,000 again? Let me know what your thoughts are in the comments below. If you found this useful, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out. Link in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.